There we go. Hope you guys have all been having a good day so far. It's snowing a lot over here, so I've been busy doing a little bit of shoveling to make sure everybody can get in and out of the driveway pretty well. And Loki himself has also been liking the snow a little bit here. So we haven't had a member stream for a while. Sorry about that. I've been pretty busy. Loki says hello. Oh, you guys can't see Loki. Maybe if I do this. There you go. Now you can kind of see Loki. Yeah, yeah, yeah. He's been having a fun time, everybody. But today what I plan on doing is giving you guys a little bit of an update on Bitcoin if you guys want. Please be interactive in today's stream. I'm always kind of bummed off about these streams because nobody wants to ask many questions or nobody talks. So if you guys have any questions about Bitcoin or any stock out there, let me know. What I'm going to be doing primarily for today's video and for the next few videos over the next week is I want to do at least 3 member streams next week. Is I'm going to be doing a lot of setting up charts for, especially in the stock market, where if we have a breakout, you're automatically going to have an alert set up on your phone. That way, you guys can have an easier time of finding specific trades, so to speak. So that can be a resistance play where you're shorting or buying a put. That could be buying support, going for a call, or maybe buying a call for a breakout and a put for a breakdown, so to speak. But you guys are going to be alerted when those moments are close and when you're testing out those specific levels of resistance and support. Okay, so that's going to be a large part of what we do today, just so you guys have everything set up. And I'm hoping that by doing these maybe Monday, Wednesdays, Fridays, like for Monday, or maybe Monday, Wednesdays, Saturdays, Sundays, or maybe Monday, Wednesday, Saturday, Sundays, something like that. That way you guys know what's going on. Um, oh, I have an Instacart order that just started shopping here because I don't want to go driving in the snow, so I'm paying somebody else to go do it for me. Um, so today we're gonna and hey Starscream, hey I've got an itch, and hey Etrev, hope you guys are all having a good day here, and thank you all the members that are showing up right now. So today let's start talking off with Bitcoin because to be honest, Bitcoin is probably the simplest thing to talk about here. Uh, we can go look at the monthly chart. Let me make sure my desk is cleared off a little bit. I got some remote controls for the back behind next to me. Um, let's get out of this right now. So, we're still in this bad spot. You can look historically. We're still in a nasty bear market. We don't know if we're at the bottom yet. We have a little bit more to go. I think we have a little bit further to go, honestly. But I don't think it's going to get terribly bad until I would say next year, end of Q1, Q2 type stuff. We could definitely have a poor January, February, March type stuff. But I don't think we're going to see a big drop until at least February, March, April, May time frame. So all I want you guys to pay attention to right now for this week is, can we close and hold above this 17,585? My concern here is that we have a fake out and where we might actually just close above this for 1 week and then the following week we come back down. We still have to deal with a few levels of resistance, but the number right here on my screen is 17,585. The number you guys are going to be using is $17,622. That's where you see the support level for the June lows for the tether charts. I'm using the US dollar chart right now just because it goes back further back in time here. So that's the goal for this week. Going a little bit deeper in here to the 4-hour chart, you can see that we're in the process of breaking out of this smaller downtrend right here. Smaller. What I've been using personally for this one, if I can recall what it is, it's an older trend line from what trend line was this? Was it from here? No. There's a trend line somewhere in here that I forgot. It's on my phone, but not on this chart. But basically, we're breaking out through a little bit of resistance right now, and that's awesome. You guys would recall a few days ago, I was talking to you guys about 2 specific trend lines that I wanted you guys to pay attention to. We got one right there, and this more reliable one over here, because this is a pretty aggressive move up, right? So what I was talking to you guys about is, as soon as we hit was this the one? Oh, hold on. It's all about the log. No, yeah, there we go. As soon as we hit that one price target here, I had a feeling we might do a little bit more of a dip and rip type of effect. We have had a dip. It wasn't too big of a dip, to be honest. I was hoping we might come down a little bit more and maybe ride off of the 50 moving average on the 4 hour chart. That didn't happen. So we found some good support here. We're trying to do the ripping portion right now. In order for that to continue going on into the rest of the week here, I'll delete some of the Fibonacci extension levels here. I really want to see the Nasdaq and the S&P 500 have really good weeks as well, which may end up being a big false breakout week if you ask me. So we might come up here then get rejected. But even if you guys were to buy some coins or assets right now, you could see yourself making about a 2-3% profit. Altcoins definitely more 5 to 10% profit range here. But really good if you guys want to start day trading, I would say my focus has really been day trading. I know I've told you guys about this numerous times, but day trading seems to be the place for me right now because I was talking on a Twitter Spaces last night, and I was talking to a couple friends on that, and I was saying, you know what, me and a couple guys come from trading stocks backgrounds, and then we kind of moved over to crypto. But we're both talking about how the market is so irrational right now in such a little daisy land that it's hard to do like profitable swing trades here unless you're in and out within 24 to 48 hours. So, what I want to see for the traditional market here is this, and this is what concerns me a lot this week. Uh, Everybody's talking about a Christmas rally. I think we can have one, but we're getting close to that decision time where we're going to have to make that big move. Okay, we have a little bit of news coming out this week. That's we're used to that. But if I go over here to our main watch list, let's start off with the dollar index here. Let's just kind of work our way here bit by bit. We're currently testing out a little bit of support right there. I'm not really terribly concerned about this. I think if we bounce off of anything, it'll actually be the 50 week moving average, not even the not really any strong level here, maybe around $100 or so. We're on a really nice downward trajectory right now because people are feeling that, hey, interest rates aren't going to be that high, and I think I would have to concur with them. And just so you guys know, for later, we do have a while before we actually hit that trend line there, okay? And even further, if you want to go to some of these longer trend lines, that's like 2029 out. That's a long ways out. So I'm not going to be focusing on that too much. But here's where my concern is. You see the NASDAQ right here? We're getting towards the end of this upper trend. So every time we have one of these breakout rallies, we come up, we get knocked down, come up, get knocked back down. Are we going to have the same thing happen here? And that's what we're going to see with these death crosses, with the 20-week crossing below the 200, the 50 crossing below the 200. They're all coming in, they're all screaming down here. Most likely going to hit sometime, let's call it somewhere in January, maybe February, if we have a little bit more of a leveling off. But I'm concerned that, we're getting too close to that resistance level. And just like what happened over here, we're just about to get slapped back down. Even with a bullish or a 50 point rate hike, I think we can still have a bad results, okay, from getting technical knockdowns here. Now, SPY, same thing. You can see it right here, except for the SPY. If I go right there, we're a little bit closer right now, and we also have to deal with the 50-week moving average. That's also something that concerns me about this week. So I'm watching everything very closely this week, and it's going to be more day trading, like I kind of told you guys a few minutes ago. I don't like that we're near these resistance levels, because even during this time frame where we've seen a lot of different stocks kind of go up a lot over the past few weeks, we've been through this before, just like a couple months ago, and everybody seems to forget about it. We have this nice little pop. Everybody's like, oh, is the bear market over? Because we all watch CNBC, Fox Business, Bloomberg. They all say the same thing, and they just regurgitate it. We kind of get used to that regurgitation. So now we have to either have a very, very, very bullish week coming out here to have a nice breakout, and then test out some of these next resistance levels. Like for here, for the SPY, it might be 433. Or we have to start looking at breakdown spots, and we have to start saying, wow, where's our next level of support? Because we could be coming down fast. Whenever we come down, it's pretty ugly and not as choppy as when we kind of go up here. Now, the other one here that's going to be a little bit easier for you guys, maybe, is going to be the Dow Jones. Doesn't tend to fall that much when the tech bubbles are bursting. But we've already had a breakout, and you can see how it's moved up. If the SPY and NASDAQ do have that breakout, it could be a good strategy for you guys to buy some calls, and you guys could put whatever's on your watch that says also breaking out, follow that trend there. Um, Tech though, the Dow is usually a little bit better in bear market situations, and by that I mean if we go over here to the past couple cycles, um, this is when the tech bubble was bursting in 2000. Go to the Nasdaq. That's the tech bubble bursting. So you see it much more dramatic in SPY and the Nasdaq. Even going over here to the SPY, very dramatic in '09. And the Dow did get pretty dramatic in '08, '09. But you can see the difference when it's not a financial crisis type of thing happening, when it's just general, hey, everybody's getting layoffs, everybody's getting ready for people to stop spending money. That general vibe right there, okay? And to be honest, we actually haven't even hit recession as the new definition came out, okay? We haven't hit that level yet where everybody's panicking. And that's something I want you guys to know as well. And then before we start going over individual stocks, if you guys have any stocks you guys want to check out, let me know. Otherwise, I'll just go through a couple like Apple, Tesla, something like that. Maybe even Home Depot. I'm looking at that. I'm gonna get rid of all these technical indicators here for a second, and I want you guys to focus on this monthly chart. You guys see that whether it was 2000 or 2008, we kind of had this curl down in the monthly moving averages. We're not going to talk about these that often, but you see how we have these curls where the monthly moving averages eventually start coming down, and they start coming down, and then you've hit a bad portion because the moving averages was tilted over. You go over here to not Ethereum, but you go over here to SPY, see how they come down, see how they come down. Go over here to the Nasdaq, you see how they come down, all right? Well, if you look to see where we are right now, the Nasdaq is just now starting to come down, just now starting to teeter here. SPY just now starting to level off and trying to teeter. It hasn't even really started to teeter off yet. And the Dow here still going a little bit sideways, a little bit up. It still needs to teeter down here. So once those start coming back down, that's where I can see a lot more reassurance is that we're going to have a really bad first quarter, maybe second quarter coming up. Okay. We rarely have those crosses here. The crosses that occur happen way after, like months after the big downturn has started, right? Um, not so much for the Dow, mostly for the SPY and Nasdaq that we were talking about. Yeah. Um, but that's something just month to month. Keep an eye on it. We want to see those come down a little bit, and we've seen it level off like this before, right? Level off and continue on its merry way. I don't think we're there because we weren't having a recession in 2015. The economy was getting out of a rut. It was still doing well. 2016, 2018, 2019, choppy a little bit here, good up until COVID. Then after COVID, it just really ripped up. I'm more concerned about what happens over the next few months. For now, I could just see a lot of sideways choppy action as far as the stock market's concerned, but generally coming back down. And by choppy, I mean something like this, right? We're down a month, up a month, down, sideways for the month, basically, up, down. At the end of the day, we're kind of right back to where we were in May. All right. So that's what I mean by choppy going forward. Okay. And hey, bye from happy not working this Sunday. I was going to do some more work here. I had a lot of meetings for some of my marketing business stuff yesterday, Saturday. But I'm usually free whenever a client needs something. And these are more of just not like me doing work for them, but more of me like, hey, you need this thing help. Let me help you find out somebody that can, in this example, help do NFT mints through credit cards, stuff like that. It's all about networking with me now, I guess. But yeah, if any of you guys have any questions, hey Monica, hey Starscream, if any of you guys have questions on stocks, let me know because I'm always happy to kind of guide you guys through this little process here because it's going to be a tough week for me personally just because I am having to. We're going to be doing breakouts and breakdowns, but again, Nasdaq SPY they're really close to those resistance levels. When is Jerome Powell's Fed meetings, Fed minutes? Oh, actually, let me just do this. Not Federal Way. There you go. And today's the 4th, December 13th and 14th. So that's not going to be this week. So that's going to be the following week. So I guess people are just going to be more worried about that. I don't see any problems there for us this week then. All right. So let's just kind of get this started off with, I would say, we can just start off with the breakouts, I guess. The watch list breakouts. Um, this is a monthly chart. Let's go to the dailies. Hmm. Philip Morris. Let's go with the tech ones first. Actually, we'll do Philip just so you guys can see my thoughts on it very fast. Most of you guys probably don't trade this one. It's more of a long-term hold for me personally, but you can see we're heading up for a major resistance level after having a breakout just a few weeks ago. This breakout was interesting. It was one of those more choppy ones where you could actually do a full-on swing trade. This is the type of swing trade I yearn for in a bull market. I didn't take the trade because I wasn't sure it was going to hold up, because every time we have a negative amount of news, we just come crashing back down, right? And then on top of that, you can see we actually broke out, then broke back down, then held used it as level of resistance, then we took off. I don't like seeing choppy actions like that. But I do see we're close to this level of resistance, so maybe if we break out above this, I may do a small day trade with a large amount of capital behind it, so I'm not risking too much here. Um, as far as like I can be in and out and make some good money without having to do a small position and try to hold on for a longer period of time to make some money off of it. But I'm watching it closely. I'm personally more looking forward to when it does come down, even though this is a long-term hold for me. I would hope that if it just comes up here a little bit more and it does find some resistance, I might be able to short this sucker or buy some puts on it back down here towards $99, because remember guys, when we do end up having these breakdowns and when we get rejected off of these bear market rallies, we tend to come down fairly fast. So I'd be okay with doing like 2 days of separate day trading on this one. And then for that, if I go over here to the 15-minute chart, I'd wait to see what happens. Let's see right here, yeah. I'd wait to see what happens if we actually do come up here to 104.90, and I think it'd be worth taking a short-term put on this resistance here and see if it comes back down a little bit. If it doesn't, I'll try to get out as it breaks even. But that one's kind of more iffy. Let's go to Apple here. Apple's more fun. You got more stuff happening on the shorter term charts here. Let's go over to the 2-hour chart. Apple's getting fairly close to a couple resistance levels, depending on how you want to look at it. Let me zoom out more and make sure I'm not missing anything. I am missing something here. Let's just go to 4-hour then if it's not going to let me do precise. There you go. All right. You can see we're kind of in this weird little flag right now. We had a double bottom earlier. If you guys saw this double bottom, awesome. It was kind of hard to catch because of how fast it moved up. A lot of the action actually happened in the after hours. But basically, what I would have set up right now on my Apple charts is this basic trend line, basic 2 trend lines. Consolidation pattern. We kind of leveled off, honestly, before we hit this. So usually when I see that, I don't really put much stock and say, hey, we're going to be going up as a continuation pattern or going down. If we kind of just like bobbed, if this section right here wasn't there and we just came from here to there, then definitely more consolidation, continuation pattern, we're going to be coming back down. But that leveling off period for a few days, I mean, what? Yeah, a few days, yeah, makes me a little bit more hesitant here. But I would like to have this pattern on here, and then what I'm going to be doing is just very simple, right click, add alert to trend line, and I just want to see it crossing. Let's just do once, I guess. I'm just going to do crossing. I'm not going to worry about crossing down or crossing up. I just want to do crossing. And let me exit out of this very fast because I have a bad memory and I forgot which one I did. So add alert, crossing, trade down, alert. Oh, that's fine. That's fine. Okay. Let me just double check what it's talking about there. Nope, not too much of a difference. Okay. If it does do that, don't worry about it. Most of the time, the stock market is fine to be trading in and out of logarithmic. Crypto market's a little bit different because you see how crazy it can rise and fall. All right, let's go back up here. All right, trend line crossing. Trade up. And then if one of those two things happens, I'll have a plan. So for this example, if it does decide to break out, uh, I'll go up here and I'll go down, and I'll aim for, if I'm buying a breakout around 149 strike price, I'll scale out a little bit around 152, and then I'll try to scale a little bit more around 155 here if we do have a breakout. It could go further, don't get me wrong, but I'm being extra cautious right now, and this is a 4-hour chart. So what you're going to be seeing here primarily is a multi, like maybe at most a 2-day trade, which is as comfortable as I feel doing right now. But that's if we have a breakout here. After that, excuse me. Actually, hold on here. Let's not do this one. The reason I take this off now, the more I look at it, you can see how it didn't. Oh, actually, let me go to the 15-minute chart. Did it actually hold up? It didn't really hold up there. It didn't do much there. It didn't. This one's not really accurate for what I want to see here. So what I think I might do now is let me get out of this magnet and let me go. Oh, my Instacart order is coming soon. I wonder if the shorter term one may be better. That kind of matched up. Kind of use that as a support a little bit. So yeah, maybe I'll have just a short-term price target of 153 to kind of match this zone. So maybe 150, 150, go a little bit lower than this. 150, 150 to a 153 zone, and I'd be happy with that. So what I'll do for this is, I guess we can go long here. And as far as my stop loss, if I do buy around here at this trend line, I'm moving that up. Let's go for about a 0.5%, 75 cents stop loss. That's not terrible. And so I'm going to be risking here from a percentage standpoint if I was just to buy the asset, not options, because that's where it's a little bit different. I'll be risking about 53, 0.5% to make about 2% here. I'll be right back. I'm so sorry. My Instacart order's here, and she knocked instead of just leaving the stuff at the front door like I asked. But I should just go bring it in very fast. I'll be very, very fast, guys. Coming back, I promise. But yeah, since you knocked, I know Loki's going to go looking for it, okay? All right, I'll be right back, everybody. So sorry, so sorry. Count to 25. I'm back. I just brought it into the stairs area. I'll put it up a little bit later. But yeah, so that's my thought process on Apple this week if we do have a breakout. Another way you guys may be looking at this is if the SPY starts to go more sideways, excuse me, the NASDAQ. Let me catch my breath. Yeah. All right. If the NASDAQ decides to go more sideways this week and it gets a little bit choppy, you may actually use this as an opportunity to short or buy some puts on this. If you guys want to be buying puts on this, you're not going to be looking so much at the 4-hour chart like we were doing right here. You're not going to be looking at that. You're going to be looking more. Let me get rid of this stuff right here. At that fib retracement level right here, you can see there's a little bit of resistance right there. And I'd be using this to find some levels of support. You can see it's been okay, not the best, not the best. I want to rate it not the best, which is why I've been a little bit more cautious here. But if we go over here to the 15, as we get closer and closer, you see this right there. And more importantly, I would say for now, you see that right there. If we start breaking down below these, that's why I'd be more confident in my put. So I might take a taste of a put here, but if you guys want to have the extra security and don't want to worry about it, oh, I bought puts right here, then all of a sudden it broke out, now I'm losing a small amount of money, whatever your stop loss is, you can just wait, say, hey, even if it comes up here, I'm not going to worry about it. I'll worry more about my puts when I start to see formal breakdowns. That's perfectly fine as well. Me, myself, I tend to make more money on breakdowns than actually buying at or shorting at resistance zones. That's me. And that's primarily because when I trade options, I don't like, what is this good? This is more of a 15-minute chart example, but sometimes it happens for days. What you'll see is it just stays up here for a while before eventually getting knocked back down. And that whole time where it's testing, my theta is going down, and I kind of just like, you know what, I don't want to see it. I don't care about it enough. And so what I do instead is, again, I just trade the breakdown, and that's how I make the majority of my money when it comes to swing trading or even day trading. But day trading, I would say it's a little bit easier. You're just waiting maybe a day or 2 days for the resistance levels to kind of show you if they're going to break out or break down. Whereas on the daily chart, you can be working, waiting days and days and days and stuff like that. Uh, and hey, Monica, I got some calls this week on. Oh, and hey, Starscream. Dude, if you have any questions, please feel free to let me know. These streams are for you guys. I don't know exactly what to do when nobody talks and nobody asks questions. So when you guys ask me questions, I'm always happy to help you guys out. The way I'm going to be doing it forward, before I go answer Monica's question, I'm going to be doing this type of stuff. I normally don't do this because I thought it might be a little bit too boring for you guys. But the more I think about it, I mean, if you guys just have these things set up before your week, you're going to be much better off. And as I'm building on this tutorial in the background here, which I haven't put out many videos, I apologize for that because I've been doing all this new stuff. Um, but as I've been doing these tutorial videos for you guys and kind of doing some stuff in the background, I'd be like, hey, why don't you guys just do this? It's much easier. You guys have everything set up for the week, and it's not like I'm teaching you guys how to trade every single day. I just want you guys to walk away with a profit every single week. So if you guys trade, 5 days a week or twice a week or every hour you can if you want to, um, I want you guys to just not have to really be watching the charts as much. Do your life stuff, and then just a little ping on my app or a little ping on my computer while I'm watching Netflix on one screen or Disney Plus on the other or anything up there. You know what I mean? I can be multitasking. Then all of a sudden, ping, and then since you've done your research beforehand, the trade is still in your memory, right? You might have had a note situation or Excel spreadsheet somewhere that says, "Hey, I have this set up ready to go. If this breaks out, I'm buying 155 call strike price, and I'm going to be trading those for a few days." Maybe 24, like maybe 2 hours, an hour, a couple days. It's up to you guys, right? Some of you guys feel way more confident about going swing trading than I do, and there's a lot of money to be made there right now. Me, I'm just too conservative for that type of environment. But yeah, let me know because like there's so many things here that people don't pay attention to. You can see right here. Nice little breakdown. Held support here. You got to wait for the close. That's why I normally watch the 15-minute charts with you guys. When it finally did break down, you saw how just the trend continued until it broke out again. We found some support. That's kind of even hard to see the support there, but you would have only had it from like here to here. A couple of days of bouncing. Then, there was a lot of wacky stuff. Then you have a double top breakdown, retested after the breakdown, and then we came back up, and now we're back up a little bit. There's a lot of basic stuff happening here, but it can be very annoying to have these alerts set up. So I'm not going to do it right now, but I would also have an alert set up here or an alert set up here or here, just so, because you can even see like this line right here. Guess what? It came back to help us out just a few days later. My charts are horribly, horribly clustered. I can read those charts because it's like what I want. When you're in school, everybody tells you to the teacher tells you to do notes, and then you have like a note specialist come. I don't know if this is a private school thing or not, but they could bring in a person to kind of teach you how to take proper notes, and the lady would always say, "Hey, as long as you can read your notes, don't care what anybody else says. As long as you have an organizational structure there to them, and you know that you can comprehend your own notes." Keep doing them the way you've been doing them. Oh, sorry, my music turned up a little bit. I don't want the YouTube to hear my R&B soul music playing right now. But honestly, whatever system you guys have that works for you, that's how I like to do it. And I was just talking the other day to somebody last night on Twitter. So he can I find the original post? Yeah. Bleeding Crypto said, I will hold my Bitcoin for scenario 1 and I have orders below for scenario 2, win-win. Scenario 1 is a breakout. Scenario 2 is a retest, then a pullback, then a breakout. I think right now we're trying to break out. That's what Bitcoin's trying to do. But I was asking, I didn't ask him. I just said, hey, add a fib extension onto that chart and you have my scale out levels, or you have my scale levels. And he says, no need for an extension, one trade at a time. This is not a bull market. We are only still in a bear market. Slow down and take it easy. So he doesn't use extensions in a bear market, which like blew my mind. And so everybody has their own strategy here. And you guys know me. I've showed it to you many times. I totally believe in Fibonacci extensions, but you can see how he doesn't believe in them. It's slow down, but there's a bear market rally. How could you? That's a bullish trend. So I use the extension to follow that trend. I think if you actually go over here, it's trend based fib extension. It's going off of the trend. So I always think it's pretty interesting how everybody can have their own strategy. So whatever you guys are, whatever works for you guys, just stick with it. But make sure you guys follow the data, the data, the data, the data. That's what I'd really focus on here. Now, as far as the two plays here for Apple, because Apple is always the easiest thing I recommend most people try to trade first, besides SPY. If we do have that breakout here, I guess this would be a larger breakdown, wouldn't it? Probably best to go off. I'd keep both of these on. No, which one's less aggressive? Let's go here. No, that's the one. No, that's the one I wanted to carry. When in doubt, I go with the most leveled trend line. That way, if I break down below the first one, I'm not going to open a short there, and it just bounces off and continues on this shorter upward trend, if that makes sense. Even though the big breakdown right there could be damaging, but I don't want to take that risk. So two things for this week: if we have a breakout somewhere Monday or let's say Tuesday, I'd be aiming for 152 strike price, expiring this Friday, in and out within 1 hour to a day and a half. So, that'd be sometime in the middle of the dating day on Tuesday. And my concern here, just to kind of bring it back before I answer some of Monica's questions here, is that even if we are breaking out, awesome, I'd be happy. Apple itself is dealing with some news events that makes me even more cautious to go jump into it, even though Apple is my favorite. So you guys might have seen Tim Cook being asked questions by, I think, a Fox correspondent about everything going on in China. And then on top of that, we have to worry about the NASDAQ facing that larger resistance level, if I can find it. NASDAQ, there we go. We have to worry about the NASDAQ facing this general downtrend, and we're getting to the point where we're going to have to retest those resistance levels here. So I could see Apple actually having a breakout this week, only to get messed up later on towards the end of the week here. So that's my main concern. But I'd still be more bullish on a breakout. Okay, so if a breakout, I'd be happy to take that trade. Now, Monica, you asked about BS. Oh no, I got some calls on breakout MO. Okay, let's go with MO first. Altria Group. I've been hearing a lot about this. It did have a solid breakout over the past few days. I'm going to show you guys that right there. Nice little breakout around $46.65. Let me just zoom out a little bit more. Actually, let me go to the monthly chart just so I can see what's happening. Yeah, what a weird one. Yeah, this one is always a little bit more confusing. All right. Definitely has a general downtrend here. We just had a golden cross a few weeks ago, which is nice to see. We are going to have a death cross on this one pretty soon, though. Let's see. Oh, this is a monthly chart. Never mind. Don't worry about those moving averages. That's saying we're going to have a bad 2023, but that's fine. So you're in the middle zone, so I don't like it as much. Normally, you guys don't like to buy towards support and resistance, but I guess this just made the support, didn't it? Okay. I was thinking of doing a longer term Fibonacci extension level here, but I think it'd be better just to do a shorter term one first. And let's get one more in here just in case it does matter. All right. Let's go to the 15. Has any of these been honoring it? Honored that one. If I move this up and down, okay. A little bit there. Which one am I looking for? I guess it's this one right here. That's just a line. Uh, hmm. Okay. Yeah. Okay. Looks like that one's just gonna be the one we're going off of right now. So I would have my first scale out level somewhere around $48.22. At least at this point, I'd be using the level that we just broke out above, around the $46.55 or maybe 65 cents. I'd be using that as my stop loss here since we have had a breakout. We're in a nice uptrend. That first warning sign that I would look for that maybe this trade isn't going to go like a strong upward move after the breakout would be if we actually break down below this trend line right here. Very short trend line. This is only from about 2 days of price action here, so it's not going to be the strongest, but that's going to be your first indicator that something bad may be about to happen. Okay, and by that I just mean a trend change. And options, if your options are going sideways, it's the same as you. It's the same as them going down, basically, right? Because that theta. Um, as long as it follows that uptrend, I'd be fine to continue holding on to it as long as it's kind of close to being in the money, or the expiration date isn't so far out that you have to worry about theta kicking into it, even if it's like not moving up as fast as it should. So it's at $47. Like if you have a strike price at 60 or something like that, you definitely want to be out a little bit sooner because you know it's probably not going to hit $60 before this Friday or next Friday. Uh, but I'd really just be aiming for $48 and scaling out maybe the majority of it there. Let's go over to the 2 hour chart very fast. You can see on this nice uptrend right now. I would try to be scaling out on this little nice move because I think afterwards it's going to go sideways for a little bit. And with the way the rest of the market's going, I would feel that, hey, we might have a little more of a pullback, at least leading up into Jerome Powell's talk on next week. Okay. Now, let me zoom out a little bit more here to kind of find some more general areas because we already broke out above this one, didn't we? Let's go to the daily chart. Yeah, we broke out above that one too. Let me just check this to make sure there's no other warning signs here. Hit one, came back. Hit two, came back. Heading right here as well. Okay, so this is important to know. Be careful of the 200 daily moving average. That could be a problem. And also be careful of this level right up here on 47.87. I think it could actually have a wick up effect, and that's why I'd be closer to like just to scaling out around $48 or so. But yeah, careful of this one. It could be a hidden little trap here. Okay, so make sure your stop loss is at this point. So wherever that stop loss is, you're walking away with a profit. Okay, but some hidden flag signals right there saying just be careful. Okay, because these ones seem to be pretty darn accurate there and there. And actually, how'd they work out the last time? Accurate for a day. Nah, a little bit before breaking out a little bit more. So you got some other plays you got some other things in place, which is good. So I'd be okay with it, kind of getting back up here to the $48, $49 range and scaling out there. But I would say you want to watch this pretty closely on Monday, tomorrow morning, especially as the bell opens up. All right, now you'd also talked about AMD. AMD's been interesting. It's been very interesting. You can see, let's go over here. This is something on my watch list, but you can see how we were in this flag right here. We broke out of it, and now all of a sudden, I don't know. What's the best one to go from here? Maybe something like that. We kind of had this weird fake breakout where we broke out, but we didn't. So like midday, we broke out above it. I'm sure some people bought some calls here, and then boom, it just never was able to hold up, and we just ended up coming back down here, which kind of sucked, right? See on the 4 hour chart, maybe it looks a little bit better. Um, so I'm a little bit more cautious about this one right now, just because of that little weird move. Although a lot of it happened during pre-market. What I want to see off of this one here is not so much that we have a breakout like that. I I don't even want to really buy calls on this one because of that weird little move that we had. But let me show you something over here. I thought we might try to hold on to that old trend line. That didn't work. I did some work on this, I think, like 2 days ago now. Um, is there anything else here that might be relevant to AMD? There you go. I'm more at this point looking to see if we can get up to 83 bucks. I'll buy some puts on it. But I'm not even sure if we're gonna make it that high. At least at this point here, guys. Let's see if I can pull it up. There you go. That little bit, this level of support. I think that's where I'd want to do the breakout, not necessarily this smaller trend line that's kind of going down just a little bit. I'd rather just see if we can break above $79. I'd be perfectly fine with it. But for now, it could definitely be choppy for the next few days. So be wary of it. The trends are working in your direction. The 50 is about to 50-day moving average is about to swing over. But for options, it's going to be more of a wait and see approach because everything is still too far apart to make a really massive move unless we have some really good news about the economy this weekend. I don't think there's going to be much news about the economy, unless maybe Apple gets a little bit less bad coverage. When some of these larger tech stocks fall, they kind of drag down the whole index here, which could drag down AMD as well. But if we can see a breakout around 79 bucks, yeah, sure, like an $80 strike price call expiring this Friday in and out within a day or two, that'd be perfectly fine. If you have a call already, I would still be okay holding it. You might be losing a little bit as far as theta is concerned because there's not really a breakout happening right now. But I would just be mindful that if we do break down from here, we're probably going to be coming down from $74 all the way back down here to $70.50. That could be about a negative 20% move for that option that you may be holding. BSY is one I found on Finviz as a breakout place using scanner and AMC if possible. BSY. Bentley Systems Incorporated. That's a weird one. Didn't like staying breaking out, didn't it? Okay, short-term watch list. Make sure it doesn't break down below this level. If it does, it may come back to retest this trend line here. Why? Let me turn log off and on very fast. Why did it have that false breakout there? I wonder if it was news related or something. It's at a good price. Maybe what's the market cap on this sucker? 11 billion. Yeah, I shouldn't have any problems there. Why the false breakout? Okay, it's not too big of a deal. This is why I'm so cautious about swing trading. I would have totally loved to take that trade right there. Maybe not, but it kind of sucks how it didn't continue on there. What's the best way to show you guys this? We could have a couple here. Yeah, that's the one level right there. I guess if I move it down, then it makes more sense. I would start scaling at around $41.90. That matches up with the resistance level that you can see right here. But oh, that's why we didn't continue the breakout. Okay, that's not too close. Or am I just need to turn off the fib levels? Fib levels turned off. Okay, there we go. Okay, okay, it's fine. So be wary of that resistance level right now. It could be a little bit of a pain. The way I'm thinking about this, since you already bought the breakout, you're probably already up a little bit. As you kind of see what happens Monday and Tuesday, if the breakout continues, I would continue to scale up bit by bit as you feel appropriate. Although, as soon as we have a breakdown, let me get out of this for now. As soon as we get a breakdown off of this trend line here, I would actually get some puts, and I'd probably have an alert set on this line right here. I'd buy some puts, and I'd ride that breakdown wherever it occurred back down to this trend line right here, somewhere around there, and just do it quick in and out, maybe 1 day, maybe 2 day hold, And I think you could make some money on the breakout, and then see if we get rejected off of some of those Fibonacci levels, and we break down, and we have to break down too. Um, then you could have a short put play down here and then get out. I mean, it could keep on going down. Don't get me wrong. You could play that out if you want to. But if you want some really nice, just in and out, just kind of walk with a little bit of money each day, that could be a good strategy here. So, two resistance levels that you're going to be paying attention to right now. The one that's right around here, right? And the one that's a little bit higher, kind of matching up with that one zone level. And then the other one I think we were just talking about here was, let me redo this. There we go. All right. First little bit, more of a resistance level. You don't really have to scale out here if you don't want to. More traditionally, start scaling out around $41.71, and then scaling out a good amount around $43.89, kind of close to $44. From here, you could be anywhere from like 10 to 15%, around 50%. And if you want to go more aggressive, you can leave the rest of it in here to see if it goes up to $46, $47. If we do see a lot of these major indexes actually have big breakouts this week instead of kind of test the waters as is kind of the norm. Um, that's how I'd be playing this right now. If we do have this short-term breakdown, it'd be a quick in and out play. So if I were to show you guys this right now, you can see how these lines are moving as I'm scrolling. Okay, let's see. No, let's keep them to where they were on the 4-hour chart. That's how the market's going to look at them. I mean, it's good enough. I messed up something then. About is fine. Um, if you see the breakdown from here, I'd play that breakdown from here, get out, and maybe even do a call switcheroo again and see if you can get a reversal there. And then you might just have a choppiness on this upward trend until it breaks down. And then when it breaks down below that trend, you could even go again. I'm just not sure if we're going to break down on that first attempt right here, or if we're going to have to bounce around a little bit. Could be a half an hour. I mean, it could be a couple days or so. And then we break down. Then you take that short, and then you start scaling out again, so maybe around $35. You could do a lot with this one right here, just because it's kind of had a robust move over the last few days. But yeah, you could definitely have some fun with it. It's something that you would want to be paying attention to for like days on end, though, to kind of memorize some of that price action. Let's see, oh geez, my sister is back, and Loki just like sprinted up the stairs. Um, let's see. Oh, it's okay. I mean, people can view it. It's fine. I put it to members only, but sometimes YouTube glitches up. It still says beta when I do member streams. It's not going to hurt anybody. Next week's will be member. I'll make sure to like see if it goes members only or not. But only I think members can respond right now, which is fine. Um, yeah, but that's some of the things I'd be looking for. And then if you want to add those onto your charts, you could also just have the alert set up as well, so you can have some day trading alerts. A lot of what I'm doing is day trading alerts instead of swing trading alerts. You can even see right here, it just started that trend. I want to hope that I hope that trend can continue, especially as we kind of finish off this. Can you guys see it? Oh yeah, high, bottom, bottom, broke the neckline. Nice double bottom here. Let's see how fast that can surge, right? So there are like a double bottom going into a resistance level. That's something that could be pretty fun to trade, right? Although that's more ballsy. But yeah, so I would still say, yeah, it's a good trade. The scale out zones are fairly close, but don't feel like you have to scale out too much, because you could always just be moving that stop loss up bit by bit. Just be careful of, I don't know. Doesn't seem like this has too many really bad days. This was back in May, uh, back in November a little bit. I don't see it having too many like big gap down days, so that brings me a little bit more comfort about as far as holding this maybe for more than 24 hours. 24 hours is like at least 2 days in the trading world. Um, okay. Yeah. And hey, I've got an itch. Burry tweeted yesterday he is not short. Do you think he's just trolling? Never knew he had a sense of humor. I don't know. He always deletes his tweets, so I never get an opportunity to kind of read them. Maybe every now and again when somebody else like pick them up or not, or copy them or screenshot them. Excuse me. Gosh, um, maybe. Um, the market is acting very irrational to me. This is my first bear market ever as a trader. In 2008, I was in middle school. I was in seventh grade, I believe, seventh grade. Um, so I'm still learning with you guys how good I am in a bear market. And what I figured out so far is that I'm better at day trading than swing trading in this current market environment because a lot of times when I see a breakout, and this is a classic breakout, when I have a big move up, normally you'd see it be moving back up to $46 or so. Maybe in hindsight, it'll just move right back up to that zone, back up to this resistance right here. I've been noticing that like we're on a nice little move. I have my options bought. I'm looking at some nice profits. Some bad news comes out of nowhere. Oh, job numbers were too good for the economy. Oh, inflation was too hot when it came to energy or food or something like that. And then all of a sudden the market just goes down, and it just kills the breakout, which is why these bear market rallies are just so annoying for me to trade. But when it comes to day trading, oh my gosh, it's just more work, but you're also making consistent profits, which is my whole goal here. As far as Michael Burry, I mean, I guess there's a large camp of people that think that we may have a nice Christmas rally here. I'm still kind of on the fence about it, but I have a plan in case it does occur. I would say I bet he's just trolling. I would have to assume he has some shorts for the long term here. I don't I have to believe he has shorts open. Now I don't have shorts open because I don't like to short, but I do like to have fun. I do like to have fun. Loki came back down here. I do like to have fun by buying puts instead. Shorts, I just don't like them. Puts, that's good. All right. What's the bottom indicator on a YouTube stream? Also, would like a video on Fibonacci indicator for your list. Thanks. Hey, Geosamples, what type of Fibonacci levels? Because there's a chance that I already have Fibonacci levels on my channel. YouTube just probably hasn't recommended it to you yet. YouTube, for some reason, a lot of times it separates the people that watches my streams from the people that watch my day-to-day content. And so sometimes it just feels like, hey, if the majority of people that watch Michael's streams don't watch his like daily uploads and stuff or his tutorials, that means this guy probably won't like Michael's uploads. That's how the algorithm thinks about it. But let me know what Fibonacci level is, and I probably have a video I can show you to you right now. So the bottom indicator on my YouTube channel, it's from a website called Chart Prime. It's a paid algorithm. I get it for free. I think there's a link maybe somewhere in the description at the very very bottom for it. But I think he might have changed. Like it used to be Trade Algo or something like that, and he changed the name to Chart Prime. I think that's what the guy changed the name to. But it's this. Let me go to the daily chart. And so it's like an oscillator, an RSI. It finds divergences for you. Your selling signals, your buying signals, bullish divergence versus bearish divergence, and it kind of just helps you read a little bit easier. So right now, as far as Bitcoin is concerned, we don't actually have a divergence hitting off. We had a Oh, I accidentally pulled the chart data onto the bottom part right here. There we go. You could also drag this up here, I think, if you want to, but it's just so messy, and then you got to deal with the left-hand side. I don't do it, but a lot of people do that with RSIs and MACDs. All right. So when you're in the green, let me zoom up a little bit more. So when you're in the green zone, you're in a bullish trend. When you're in the red zone or below, you're in a bearish trend. Usually when we get to these green levels at the bottom, it's kind of like being oversold for RSI standards, overbought up here on the top. And when you see that you're at a support level, like around here on a technical support level, and you have a bottom, like a support level here from the RSI, you can usually buy at those zones, and then it'll give you a nice little bit of profit if the zone holds and you have the bounce, right? So for that, I might show you something like, is there anything that actually works in the past couple days? No, not really. No, not really much here. It's better on the 4-hour chart, I would say. Okay, but so yeah, green, nice, bullish. But then we see these like little lines right here. Those are divergences. So when you have that bearish divergence, and when it's a red line, I mean, hey, it means something bad could happen here. And you can see that even though the price was going up, the oscillator was going down. So that's the divergence that you hear about. And then we ended up coming down. Who knows if this was going to be accurate or not, because FTX really just bloomed the whole thing, right? But that's also pretty interesting. and then you could add your own trend lines here if you want to. But it's a very simple indicator. Sometimes you have these little gold bars that show up. But if you want the full rundown, if you go to his website, let me see if my video has it or not on the bottom. Let's go right here. More. Yeah, this one right here. I don't know if the link even still works. Nope. I don't think it works anymore because he changed up his entire website. Um, I wouldn't say you need to pay for this, honestly. I would say if you just get an RSI and oscillator on your charts, you'll be perfectly fine. The goal here is just to read, know how to read divergences. And I think I put out a tutorial video on divergences as well, or maybe I didn't. I don't know. Did I? If I didn't, I'll make one because I have a divergence thing for you guys somewhere. Um, oh, maybe I didn't. Maybe I didn't. Yeah. Yeah, it's right here. Chart prime oscillator. You can learn more about it here. He has a whole in-depth like video about what it means, overbought, see overbought conditions, trend reversal bear, right, the little arrows. If you want to learn how to use it for the 24-hour streams, go for it. Let me do one thing very fast. Give me a second here, guys. If I go over here and I go over to my personal Google Drive, I could have swore I was working on something. This could just be my ADHD. Yeah, there it is. I totally just spaced out on it. Uh, did I really not post this? Yes, I mean it's like I built this whole thing out for you guys. Yeah, I got some bad ADHD, guys. My bad. Yeah, I built this whole thing for you guys, and I just never made the video on it. I'll go do that. Last edit was November 18th. Yeah, I totally forgot I made this for you guys. I do a lot of stuff like that, and I just totally forget. Oh, here's the channel information. You can see how much money the channel makes. $771. I was hoping for 669, but the times. Okay, so let's get out of this very fast. Get the Fed meetings calendar. Yeah, but that's basically how it works. Those are more in-depth view of it, but most of it's kind of it's also like a selling video, so it's like kind of flashy. But yeah, green arrow is good, red arrow is bad. Uh, um, little boxes right here could represent institutional trading or just a trend reversal alert. And then you're looking for oscillators to go in the green zone, red zone versus breaking out of them, to go in the different bullish and bearish trends there. All right, right there. And hey, Rodriguez, what do I think about Costco stock earnings play? Costco. I haven't looked at Costco, I don't think, in a while. You know, one of my teachers in high school was offered the guy that made Costco was one of his best friends, and he offered to let him join the startup, and he said no. All right, so to me, Costco is a day trading stock right now. That's me personally, and I think you could see where I'm going with this already. So we got that right there. We had a false breakout. And then depending on how you want to look at this as well, let me get rid of that one right there. Actually, no, maybe this wasn't a false breakout. No, that was a false breakout. No, actually, no. Let me verify that. I don't want to talk out of my ass here. Magnet. No, not a false breakout. This is a very ugly one. The ugly little chart here. Okay, there you go. This is the second one. Okay, here's the false breakout I was talking about, but I was just hoping I can kind of connect the dots and kind of talk my way through it. But as soon as I was like, but still false breakout, but just a different line. So this false breakout really, really irked me. I just have to believe it's because of earnings right now. I was watching this the other day, and you can see right here we did have a breakdown. And I missed on the opportunity to actually do this. And the reason is going into the weekend, I just don't want to take the chance. So you can see we've started this breakdown process right here. You can see how as soon as we broke down below this level, it was a level of resistance for all of like a half an hour or so, or 15-minute chart, like a couple hours. We managed to get back on top of it, have a breakout. If you go over here to the daily chart, though, something weird where we already broke out. Why is it doing that? 4 hour, 2 hour, 1 hour, 30, 15, 5. Why would it do that to me? I don't know why it does that. Okay, never mind. Sorry about that. As soon as I saw the line, my brain just shifted to whatever I was automatically seeing and explaining it. So we have had a breakdown here. We're in a general downtrend. We tried to have a head and shoulders to actually push us down, but we just didn't even have the shoulder. The 20 moving average was enough to keep us going down here. So it has earnings this Thursday after the market closes. That could be part of the reason here. Maybe people are just afraid that the earnings are going to be very, very bad. That could be it, especially because they're having how much for last quarter's earnings. People might just feel a little bit pessimistic about their results coming up. That's the only thing I can read into this. Let me go back over here very fast. A lot of sales. Last big sale was out November 4th, $482,000 out. Was downgraded back early November to 490 from 600. Jim Cramer said people are betting on them, so people probably just went against Jim Cramer here. But yeah. Okay, so we have a breakdown here. Normally, I'd be buying some puts on this one. I did miss this one. No, I didn't buy it because of earnings season. No, excuse me. But if I was to day trade this, I'd still be okay with buying this a little bit. Let me just double check. Where are we at? Okay, let me just give it the magnet. It's not going to work really well on these multi-hour charts. Breaking down again right here. That's nice to see. To the 8th. I would be looking for a 1 to 2 day hold to be conservative, and I would buy puts around the 490 strike price and be out when it hits around 484. This level of support right there. The reason why is forgetting that we have earnings coming out. People are going to be a little bit worried about that. One of the things that I can see happening right here is if I zoom and I just get rid of all this stuff, we have the breakdown, you know that. But somewhere in this zone right here, can I get a rectangle? There you go. Right there. Zoom out a little bit. That's an opportunity for us to come down a little bit more, just a little bit. I think we have an opportunity to have a head and shoulders right there and make a little bit more of a move. So maybe that might include... That might include us kind of coming somewhere in here. I don't know exactly where we're going to fall into it. I would hope that we can find support right in that first zone where that first Fibonacci retracement level was at. But then from there, bounce back to either here 500 or back up here to 508 before making that move back down. That's without the earnings, though. So the earnings may even pop you up and then keep you coming back down as the rest of the market may get rejected. That might get rejected off of those larger trends that we talked about, like the NASDAQ and the SPY. But that false breakout it makes me not like it as much. But it still seems like a $490 strike price expiring this Friday would be fine. I would still be out before Wednesday on those puts, unless you want to leave 50% of those puts in 75. It's up to you. And you do more of an aggressive play on the earnings. Now, if you do want to trade earnings going into this week when it comes to Costco, they've had some... Make sure you guys... See how we had a gap down? Fucking just... it's in the middle of the screen. There you go. See how we had a little bit of a gap up? A little bit of a gap down, not terrible that time. A little bit of a gap up that time. It's known for having really nice moves or like volatile moves following earnings. And in a way that's easy to be day traded. It's not always in pre-market or post-market type of trading. What I would like to see personally, if you wanted to do this, um, I would probably do a shorter trade first, more of a day trade to 1 to 2 day hold up until maybe like a Tuesday, Wednesday or Thursday before earnings come out after market hours. I would actually say if you want to do that, last earnings was bad. Let's say you're going to be hedging, probably expecting it to go down, but also having a short or a small long position there on put on calls just to protect yourself in case you have a big rally there. That's if you want to go big and play with the earnings results. Last earnings results we did, I think, was Nvidia or something like that. Had some fantastic profits, but we hedged just to make sure that in case it popped, we weren't left holding a big bag or something like that. Because you will still lose money maybe, but a lot of times if you have really large moves in the marketplace here, you could actually make money no matter which way it goes, because the worst your option can do is go to zero. Whereas you're trading with leverage or something like that, you go to negative territory. That's why I like options. One last thing here. Beware of that hidden bounce. Beware of that hidden bounce right now, because we just had a golden cross here with the 200 here, and on the weekly we were so close to having a golden cross there, but I don't think it's going to happen right now unless we stay on this trend for a while. But we just broke down barely last week. Anything else here? No. Still got those trends here. I hate that it had the. I hate that it messed up the breakout though. I keep track of when stuff doesn't break out like I want it to. Tesla's a big offender in that regard. That's why I day trade Tesla a lot more. And hey, Bideford, SPY and QQ. So for the SPY, I'm more bearish on it until I'm not. SPY, look at that, right up against that trend line. Here's the weekly chart. Go to the monthly chart. You're going to see the same thing. Um, I'm worried about it, to say the least. Same when it comes to the Nasdaq right here. We're still just facing these really aggressive downtrends right now, and just like with the last bull market rally, we got up to it, and then we came crashing back down, and that was not a pretty sight, right? Um, and you can already see that the moving average is starting to creep back down slowly here. But as far as the SPY is concerned, let's go over to the daily chart. All right, let me get this pretty precise if I can for you guys. There we go. Got close enough. Got close right there. All right. So, to me, let me just kind of sum this up. The way I'm viewing this market right now is I'm happy to buy some calls, but I'm really salivating for some puts. I really want the market to come down because we've risen up so much over the past few weeks that it's going to be so much fun to kind of watch the market kind of have one of these mini crashes, and I'll be soaking up profits in my puts. I'd be much more enthusiastic about buying puts for a longer period of time, like a week hold or a 2 week hold, than I would be buying calls at that same time period. Excuse me. Whoosh. Okay. Loki wants me to throw this little ball thing. Uh, oh, jeez. Okay, that could be bad. I almost hit a picture. Uh, okay. One more. Okay. Sorry about that. So as far as the SPY is concerned, right here, you see this pattern right here, a nice aggressive uptrend, and then, dude, you are trying to hurt me. What do you call and then you see this resistance level up here. I am hopeful that we can break out above this sometime over the next few weeks, and that could be the Christmas rally that everybody's talking about. I do think any rally that happens in Christmas time will also eventually will be looked back on as a false breakout that just tricked a whole bunch of people right before the economy got really, really bad. So just that's my 2 cents on that. But I do think it's actually a possibility that we actually do continue this trend here. So we're going to be looking at both of these things here. So I know we got rejected just a couple days ago on Thursday. This would be, and I know on Friday we kind of built our way back up because we had some mixed job numbers, if you will. If we manage to break out here, this is going to be considered to me a small play, maybe 2 to 3 days. And let me see if I can show you this right here. No more magnet. See the one right there? That's normally where to scale out. Since that's happening right after a breakout, I might say, hey, 413 is probably an okay place to do your first baby scale out, just to lock in some profits there, especially with the prices of the options, right? And then 424 is where I would see our next big stop here. If we kind of extend this out a little bit more, there we go. And you see how this support level or resistance level over here that used to be support over there. Um, that zone is where I would look to scale at the majority of my play here. And that's if we have a breakout, because I do think at the end of the day, the breakout is going to be a kind of a false one here. Maybe it won't be. We'll see. I'm a traditional guy. I, 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 I'm used to the markets acting rational. This is very irrational behavior by the markets, if you ask me. Because of how much money has been printed out by the Federal Reserve and just by the country over the past couple decades. Um, we don't have all the money. The money is all up in Wall Street. It's all over corporate America. That's the money that's making these huge sloshes up and down. It's not retail traders hopping, and most retail traders are out. So this is all kind of corporate money just moving back and forth, back and forth. Everybody guessing where the bottom is. Everybody in kind of denial, that type of stuff, right? And maybe you can denial your way out of this situation. Wall Street seems to think it can do it every few years, doesn't it? But yeah, so I'd be hoping for that buy zone if you want to buy the breakout around 410 strike price, and then from there hope for a 417 to 424 price target with maybe scaling out just a little bit, like maybe 5 to 10% of your calls. 10% I would say. No reason to go 5 there. Around 412, and then kind of see where it rallies up even more. When I think of a trade like this, I also think about it in terms of the weekly, because we're breaking out of a multi-month downward trend. I would want to see us close above this on the weekly chart to really get me excited about the next few weeks, where maybe we can go all the way up here to 433, then maybe to 439, and like really, really cool stuff happening right there. I would have to see us close above it on the weekly. And you could already see right here as well. Let me get rid of all this other stuff. There's the 50-week moving average right there. We're going to get squeezed pretty soon. I don't know which way we're going to go, up or down. If I was to guess, I would say down, just because we're in a pretty aggressive upward trend. All it takes at this point is really 1 week of going sideways, and all of a sudden, kaploopy. That's not even a word, but it's a word I made up. And so I'm more concerned about it. But on the other side here, let's say it doesn't actually get that good and we don't actually have a breakout. We kind of go through that historical trend here, and we end up having a breakdown instead. Well, this one actually becomes a lot easier, because this is the new lows of 2022. We don't have to worry about the lows over here, or the lows over here, or the lows over there, or the lows over there. We can actually just place up your traditional Fibonacci retracement level here. All right. And so what I'd be looking for is not to really buy puts or go bearish at this resistance level. I'd wait for the breakdown, do a small scale, and double down if we manage to break down below the 395.49 level, it looks like here. And then from there, start scaling out right as we hit the 386 level. Then we hit the 379 level. You can go on a little bit longer if you want to. The aggressive move here would be to wait for 371. A little bit too risky for me. That'd be about a 2-week, 3-week call. So we put 2-week put closer to in the money around 395, 385 would probably be cheaper then. We got to worry about the sideways action and Jerome Powell coming out a little bit later. That's the big thing. Where I'd like be careful about holding too long, even now. And then we would also be breaking down below the 20-day moving average. I didn't really bring it up too much when we first started looking at this chart, just because broke down there, broke down there, broke down here, broke down here. That kind of did something, but majority of the time it doesn't really do much. The 20-day moving average on the SPY. So I'd really be playing this breakdown or this breakout. If we do break out, I'm not going to really be going gung ho into it, but I think it is going to be worth the trade, and it'd only be a short trade, because I'm going to be expecting it to be some type of false breakout personally, unless the weekly candle, weekly chart closes above that resistance level. Okay. But yeah, I think both sides are fine, but I'm really salivating for the breakdown. The breakdowns were so much. Look how fast that breakdown happened. Mwah. Those calls, cool, but you never know how big those bear market rallies are going to be. So I'm always a little bit more iffy, because there's always all this bad news coming out, even during a bear market rally. People just like, it's not too bad news, and like then you come back a few later, oh yeah, it was bad news. But yeah, SPY is fine. I'd be looking more for the breakdown here, but if it does break out, that zone around 420 to 425, pretty decent right there. And hey, Nicole, welcome to the Ruby level. I appreciate it very, very much. See, oh, and there you go. Just talked about Spy for you right there. Um, and triple Q right there. Oh, I'm getting a bajillion messages from Amazon. Okay. Hmm. Oh, this one's really weird too. Okay, so a general trend line. I won't make it like a hard trend line here. Or I guess I can just use that one, but we're getting closer to a resistance up here for later on this week. I would say that just like most things right now that are having these small breakouts, we have a little bit more room to continue going up. This upward channel, though, is basically what I'm going to be looking at here. Go right there. Not the best upward channel, but it works. Um, got a rising wedge here that doesn't look too promising. That trend, this upward trend could die down pretty fast. You would have to see the entire market have a big boost here. So let me just put this up here. I'm used to putting this in the bottom for you guys on the daily streams. Let's go over here. How's this been working out so far? We're working pretty well up here. Fine. Oh, I'm not in long. That's why. Okay. Hmm. It's in a little bit of a zone right now, kind of at the higher point of it. It doesn't look like it's going to be too much of a pain here. Let's see. 15. This is a little bit of a yuck scenario on the shorter time frames here. Like it's already started breaking down out of the shorter time frame just off the day. It may go sideways, not just plummet back down here, but for safety's sake, I would probably just try to buy on the support level here, not really in this middle zone if you're going to be doing, unless you're doing some of a day trade. I would try to buy around the 286 level, maybe the 287, maybe even the 288, depending on how many days it takes to get over to this line here. And then from there, I would try to get a 290 to 295 strike price and see if we could play a short term bounce here. Now that'd be probably be the riskiest of the trades you can make off of this. I preferably, since I'm a little bit more bearish this week, not even bearish, just more I want to see how we react to those big resistance levels for the major indexes. I would like to see us break down here, and then from there, if we don't manage to make our way back up towards 300 or 298 or so, I would like to see us come back down here towards 280, and that could be a nice little profit from around, let's say, 288 to 280. About 3%, $8. That could give you some good profits there for options. If you're shorting, you might have to wait a little bit longer here. But this upward wedge kind of gives me a little bit more concern. We may get a little bit more choppy here as everything gets tested out. So it might not even be a straight breakdown here. If I can find my brush, it may just go more like that, choppy wise, which is why I'd say, hey, I just take my winnings right there at 280 and just walk away with it, because you never know if everything starts to break out above those trend lines at the SPY, NASDAQ, whatever. You could definitely see this start to move up as well. But This is going to be fun to trade, I would say. Not this week, but next week when we have Jerome Powell come out for Fed minutes. This will get pretty volatile, especially with all the liquidity there. It'll be very easy to get in and out of all these transactions. You're still kind of gliding on this 20-day moving average here. Just be aware that if we do break down below that, that may be a little bit more of a concern. Breakdown here, but we never actually broke out. Kind of just like opened above it, closed below it. All right. Last time we broke down below it here, still that's a bad downtrend. Here, a little bit of a downtrend. There, downtrend. There, downtrend. We actually broke down. There you go, breakdown. Yeah. A little bit more concerned about it, more bearish than bullish on it right now. But it might have some more small upward trajectory. I would just wait for the sucker to come back down and short the put the crap out of it, so to speak. That rising wedge is usually a pretty bearish indicator right there, especially because we've had such a great bear market rally here. Great bear market rally. And hey, D's, happy to see you back, my man. Are those yellow dots another indicator? On the oscillator, yes. Yeah, they normally stand for trend reversal, I believe. But yeah, this one says overbought, oversold, so it could just be hitting the levels. It means actually hit the level. But yeah, trend reversal aid, I think that's what it's called. But if you watch that video I showed you, you should understand it. He goes into it pretty well. And hey, Ghostwriter, happy to see you back. And hey, Nicole, Fubo Sports Network launched an Amazon freebie in a deal that will increase the channel distribution to more than 155 million devices across multiple streaming platforms. Ooh, and hey, D's nuts. Let's see, Fubo Sports Network. So, yeah. Before we go forward with Fubo to me is primarily a longer term hold play. Swing trading this and making money off of this, it can be very, very difficult. I have some of this. I think I'm like down 20-30% on my holds. They're very, very long term holds here, but I'm hoping for something good to happen. Okay. Now, you can see over time, this has been coming down for quite a bit of time. If we go over here to the daily chart, you'll see why. They've had a few splits, right? Split over here in 2019, and he had a split over here in 2017. It seems that when I look at Fubo here, we kind of have to bring in not just technicals, but fundamentals because it is such a small price point. You can see a lot of red E's in the bottom of my screen. A lot of those were bad earnings reports, right? They were losing money. If we go over here and check out Fubo very fast, especially on FinViz, because this is important, you'll see that right now they're still losing money. Still losing money. Their sales have been going up. That's good. The market cap is still very, very small at 556, so it doesn't really take much money to really get this thing to get pushed up to the moon or crash down to the earth. Okay. The short float on it right now is 23%. Massive. This is more of a short squeeze candidate that I think a lot of people are just buying into to just wait and see what happens here. Okay. So with that being said, let's kind of go dive deep into maybe some day trading opportunities for you here. But this is definitely one of those things where most people are just waiting, maybe even buying long-term options that it could get up to like, $50, $10. I think the max is like $20 right now, something like that, something crazy for like 12, 13, 24 months out. Right now, you're just getting back into this zone. The technicals here don't really work out, honestly, on Fubo. They usually get very jumbled up. But I'll make sure my Wi-Fi is still working out okay. You can do this small trend right here. If you want to buy that breakout, that's going to be a small breakout. You're only going to be in it for maybe a couple of days, but it may add a little bit more of a short squeeze effect to it. So that's what you're going to be hoping for here. Let's say you buy somewhere over the next few days around 290 to 285. 285 to 290, excuse me. If that were to occur, I would really just have your first scale out limit right here on 386 and second one. Your first one over here on 330. If you buy the breakout around here, that's still a 17% profit. That's still a 35% profit. When it comes to this, don't worry necessarily how far it's been up. Those are kind of abnormal things where you're having a short squeeze take effect. And this was all the way back in August. Yeah, that's how I'd play that right now, and just hope for that zone right there is we want to sell off at. Now, here's the thing: no matter where you buy this at, I feel like I'm getting sassy now. No matter where you buy this at, I'd highly recommend that you have a stop loss and that you honor that stop loss, no matter like what happens. Let's say it just barely hits it or something, or you're like, oh, maybe I want to get back in. Honor the stop loss. These things are notorious for getting bag holders on board. If you go to maybe if I go over here to Fubo, let's see. Fubo Poland looking good. Fubo downloads looking good. This happened 3 months ago. So Fubo using my relative's account for free. Stay short, folks. This is from a website called StockTwits. I don't have it, but I know it's there. But yeah, it's this one's gonna be a tough one. I'm not that good at these types of plays, or I am, but it's a whole different process. It's not like I teach you guys to be safe and do technical analysis. This is not something we're gonna be doing your basic technical analysis, right? Or maybe it's just dumbed down so much because it gets so volatile. That could be it too. Um, but yeah, so as soon as this breaks out, that's when I would buy. I would not buy this before it breaks out because honestly, if the market does take a turn for the worse going into December, which could happen still, we'd be breaking down below this like what 250 level of support, and that could take us down to new lows, which could honestly take us back down to like dollar 50. So the way I'm doing this right now is I bought in a small position. I think it was like $200, because fairly cheap, and I bought it around like 450, $5, something like that, and I'm just kind of holding it for the long term. But as far as day trading is concerned right now, I would only trade that breakout, and then I would only try to play the zone here from 332 to 387. If we do have a local bottom right here, like let's say we move up a little bit, come back down here, then we eventually break out there. Just example. I would in fact do a Fibonacci extension tool from here to that high point, to that low point, and then I would also be using these to scale out as well. So you're going to be doing a little bit of both. Um, Only thing else I would say as far as this, because it may get a little bit messy as far as like halts and stuff. If you do notice it's getting halted quite a bit, shave some off. That's what I would say there. But I'd be careful with this one. It's always very speculative, very high risk, very, very high risk, but you could have a lot of fun with it. Uh, Portfolio management is going to be really big on this one. Don't feel like you have to mortgage the house to make money off of this. Just put whatever money you feel like it's okay to be lost, okay? Because these are more of the high risk plays that we talk about here. Very, very high risk. But beautiful thing. Beautiful 23% high short float. If you go over here to, we haven't talked about this website in such a long time, but oh, there you go. It doesn't matter. All right. High short interest stocks.com. There you go. Look at these short floats. Look at that. 45%, 76.45 million. Carvana, look at that. 44. Beyond Meat, 42. MicroStrategy, 40. I mean, it is absolutely insane how big these short positions are here. So, if you guys like any of these things, these are always those speculative bets where if you want to place those YOLO calls, these are the things like Bed Bath and Beyond. I mean, this Bed Bath and Beyond may go bankrupt or out of business this bear market during this upcoming recession. Carvana maybe the same. Beyond Meat, they're just doing horribly right now. MicroStrategy tied to Bitcoin. Bitcoin's still been going down that nasty downtrend here. Nikola, bad stuff going on there as well. Evgo, I mean, mostly because of what happened with Nvidia. Wayfair, yeah, I haven't bought anything from Wayfair in a long time. Blink charging, getting overtaken by the government, going in now. Um, you know, there's a lot of stuff here. I mean, even Lucid's over here, Microvision, Big Five Sporting Goods, Fubo TV, we just talked about that very fast. AMC over here, high short interest. All those types of plays, they're very, very risky, but if you want to take the opportunity, it's best to just buy off of a breakout. And hey, Ghost, Seeking Alpha is watching Exxon, Lululemon, and GME and Disney. Disney's going to be interesting. I just got an alert this morning as I opened up my phone that Disney's raising the prices for Disney Plus. I was hurt. It's going like yeah, currently Disney Plus members pay $7.99 a month to access all the favorite Disney owned content, but starting on December 8th, that price will see a $3 increase to $10.99, nearly a 30% increase. Now, the stock market's gonna love that. Me as a consumer, I'm like, dude, what the heck? Like they keep on raising their prices, and like I'm not gonna keep paying for all of these streaming. I'm gonna take one out. I'm gonna stop using one of them. Actually, I already stopped using Hulu a while ago, but that's because I just never used Hulu in the first place. Um, but I do budgeting, so I know what I'm wasting my money or not. Um, but yeah, Disney's probably going to be a little bit more bullish this week as that news kind of comes out a little bit more here. But I was surprised about it. Surprised about it a lot. And as far as Exxon doing well, we haven't talked about oil really, have we? Where is my watch list? There we go. USA Oil monthly chart. We're finding some stability here. We know what happened with OPEC. OPEC may lower the reserves again, or they may just keep them the same. We're gonna have to really wait. But I think right now what they're talking about is Venezuela oil is gonna be put back on the market. Venezuela oil is of a lower quality, so that is something you should be aware of. How do you spell Venezuela? Venezuela. Oh, I was spelling it correctly. Wow, there you go. Venezuela oil. Oil. Yeah. So Venezuela and Chevron signed oil contract in Caracas. So that's going to be good. That means more oil into the markets. The thing about all this now is it going to open up? All right. Venezuela is a member of OPEC. People aren't talking about this, and I don't know why this is such a surprise that the media is like just totally just like not talking about this. Venezuela is part of OPEC. So they will follow a lot of OPEC's rules as well because they are one of the founding members of OPEC. So just be aware that oil prices may fluctuate a lot this month as everybody tries to figure out what exactly is going on with the oil market. But Exxon has been doing fairly well. Exxon's been just following this very large monthly trend. So let's go over here to my. Nope, wrong one. Breakouts. Zombie Zom. Right. Monthly chart, we're looking good. But what do you see starting to happen? A teetering off a little bit here, right? Weekly chart, more sideways, but going into a slight downtrend here. We don't really have many support levels here. That's the thing. And that's because oil kind of rose so fast. You can see if we kind of zoom out over the past few years, this is back over here in 2007. We're kind of back up to those historical high levels of where Exxon stock has been. They have a small dividend, but still decent if you guys like oil, right? You're going to see a lot of people start to scale out of these positions down the road. But, you know, as we start looking more at Venezuelan oil coming into the market, seeing what OPEC does at their next meeting, let me see. OPEC next meeting. Let me just go to CNBC if I can find the actual time here. I clicked on CNBC. Oh, there we go. Yeah. Will convene on Sunday. When was this posted? Friday. So they're meeting today. Gosh, okay, they don't got Sundays off. I guess neither do we, right? Um, Demand weakness, specifically in China. Okay, so you may actually see them lower prices again. That may cause Exxon to actually continue to stay at a pretty level space on the weekly chart. Weekly chart though, we got to stay like we have to try to find a bottom here, and we can't. Like if we break down below 107, we're Exxon's coming all the way down like $100, guaranteed. Um, we need to have a strong move here going, over the next week or so, because eventually this is going to come crashing down. Like when the economy goes, so does Exxon. So does all my beautiful oil stocks that I've been scaling out of quite a bit of time. But I've been scaling out of Exxon for weeks now. I told you guys that for 4 weeks. I'm like, these lower dividend plays. I don't know if I want to hold them for too much longer here, right? But that's how I feel about these ones. There are very nice moves. They're all in the overbought territory, if you ask me. Watch OPEC, but OPEC is going to guide this, not necessarily technical analysis. See. And hey, Ghost, quality is non-existent. Yeah, remember, Biden's desperate to get energy prices down. He's desperate. So that's the thing what he's going to do. And remember, he won't let more drilling happen. So this is the best thing he can do. Um, so much about the freedom of the Venezuelan people. But you know what? When it comes down to it, governments make these really bad, like, not just, from a humanitarian perception, it's a bad decision. Think of what we just did with what was it? Railroad workers. We just gave the big middle finger to railroad workers. Just like not a week ago. People already forget about it, but we did. Or Biden did. Congress, both Republicans and Democrats voted for it. Everybody did. But yeah, it's oh gosh, it's just it's wild. But that's what they did, and so I'll be interested to learn more about it. Maybe I'll make a video about this later on. But maybe I'll make a video why gas will go to $1 soon. Something really crazy like that. It won't happen, but people will enjoy it. Everybody can dream, right? But yeah, that's something to be concerned about as well. The interesting thing out here is, it's I'm out here in Washington State. We're seeing snow right now. Normally we don't see snow until like January or something. I don't think I have a picture of it. I can show you guys, but how far does that cable go? No, not far enough. It looks like a beautiful winter wonderland outside because I live, out in the forest. It's very, very beautiful. Loki likes it too. We're gonna go outside and play in a little bit. Once I get out of my flip flops. And hey, Scream, is it me or is Dogecoin the best looking crypto from a TA point of view in the short term, higher highs? Yes, it is doing very, very well. Dogecoin might be the best thing to be day trading right now if you guys feel comfortable with some of those lower price coins, like if you're casing 0.0000, right? It's hard for people to kind of grasp it going up and down with those small numbers. Other than that, Ethereum's a good one to go to. But yeah, let's talk about Dogecoin here very fast. Oh, and what did we test? We tested that resistance level this week. Let's see, came down. Uh, yeah, yeah. So, I mean, I told you guys this a few days ago, but maybe I know sometimes the people don't get alerted about the stream. What I was talking about this week was a dip and rip effect on as far as Bitcoin was concerned. Why is my head like? Okay, let me. Yeah, there we go. Yeah, because normally you guys can see the TV over me. It's like I'm in a weird spot this time or something. We had talked about a dip and a rip a lot on Thursday and Friday, and maybe even a little bit Wednesday. Let me verify that actually. Sometimes I feel like I just make stuff up, or I just don't know, so I guess the time. That's probably a better way to say it. A few days ago. So that's Friday I talked about this. So that means we talked about it a little bit more on the last time I was actually streaming. Oh, they split it up now. 3 days ago. 3 days ago. Okay. So those are the two times we talked about it. Now, dip and a rip, it seems to be coming to fruition right now, which is good. That rip for Dogecoin would break us out above the 11-cent range, and it would actually take us back up here towards 12 cents, almost 12 and a quarter cents here, which would be a very nice move. Now, after that, I would have to believe we die back down, but if we get back up to 11 cents, first of all, that's 6%. To the next resistance level, excuse me, that's 17%, which is about 12 and a quarter. After that, we get up here to 30% around 13 cents. May iffy. We need to have a big parabolic move to really see something like that happen, and it could. But I would say we're right now. What I think Dogecoin is trying to do here as we kind of bounce all this stuff up. I think it's just trying to make a high, then we come back down, and then we have a trend line like that. I think that's what we're kind of working with right now as far as Dogecoin is concerned. But yes, it does have some of the best technicals right now among a lot of different coins and assets. It did just break down here. Breakdowns, as you guys know, don't always mean that we're just coming down straight off like a rock. It can mean that we're going more sideways, and the uptrend is over. Now we're just looking at the sideways trend. Um, but right now, it still looks fine. I would get a little bit more concerned if we don't make a big pump up over the next 2 to 3 days, because then you guys can see the 20-day moving average is going to start to creep back up there, and that's not what I want to see. I want to see the price action be running away from that 20-day moving average. And if we go over here onto the weekly chart very fast, you can see we're having trouble, or we're just trying to break out above that 50-week moving average right now. It was only a level of support for 1 week before we crashed back down, though. So I'm not putting so much stock into it. However, we are normally not above this thing too often. Ever since we entered the bear market, we have not been doing so hot with this 50. We've been below it for a while. Same with the 20 here. It's only since the last like month and a half, 2 months that we've actually found our way above it, and that's been showing a lot of strength. And this has been mostly fueled by the fact that Elon Musk bought Twitter. Uh, People still weren't sure if he was going to buy Twitter because of all the legal dramas going on and everything like that. He was able to do it, forced to do it. I don't know what you want to call it there, but there was a deal, and now Elon Musk owns it. And I think even today we have I think he said something about a new Twitter files happening today as well. So he's like ginning up more support for it. We're going to be learning more about the payment side of the app later on. Remember, he was one of the founding members of PayPal, um, and so you know when he starts integrating all that stuff after getting all the small bugs and details worked out, I think that's when you start to see Dogecoin really go parabolic back to like the dollar range and stuff like that. This is months out in the making, not anytime soon. However, I think people are much more bullish about Dogecoin now because Elon Musk bought Twitter, and Elon has publicly multiple times said Dogecoin to the moon. I like Dogecoin, Bitcoin, and I think another coin out there. And those are the coins I like. That's what he says, and that's where I take him at his word, so to speak, right? Now, as far as no, I think that's about it. I was going to say something else, but I totally lost my train of thought there. I've won 3 long trades in Doge the last week. What do you think it will still stair step up, or should I pause and wait for a reset? I think this week is going to be a good week for Dogecoin, or at least moderate. Next week, I could see it being not as good for Dogecoin, unless we take this full step up, right? But we've already had the breakdown, and we're just doing your traditional dip and rip. Let me go to the 2 hour chart here. Let's go put on auto, right? So we're having our dip and rip effect right here. I would say as long as we don't really break back down below 9.5 cents, I think it'd be okay to continue holding. My stop loss would be around 9.5 cents here, or if you want to go more from the moving average standpoint, which can help you out sometimes, especially because support levels can kind of vary. Um, I would say that maybe you just use the 20-day moving average as your support level. If you get a little ping saying, hey, Dogecoin's breaking down below that, that'd be okay too. I would probably go with the moving averages over that. And you're now just seeing the 200 start to level off finally. Excuse me. But yeah, um, just be careful. If we have a double top breakdown below the neckline, then break down below the 20 and 50, that's going to be a short. We'll probably have a really nasty move, something like this. Okay. That's why you should have a stop loss involved, or at least an alert to notify you to sell, because not every platform has a stop loss. But that's what I'd be looking at there for Dogecoin. See, and hey, Ken, haven't missed much. I mean, this is going to be one of those streams you guys want to rewatch because we did talk about some Apple plays here, and then some a lot of other stocks as well. And look at Matic, possibly a breakup. Let's see. Hmm. Getting more choppy here on that 20-week moving average. Did this honor anything? A little bit, a little bit. Okay, it did a little bit here. Yeah. Hmm. It tried to make the nastiest head and shoulders here. All right, so here, Matic. I would like to see it follow this upward trend right now, and then manage to break out above this 95-cent level. We'd have to go a little bit deeper in here to see a short-term breakout for us, though. So let me go over here. We didn't make a new low. That's awesome. So we've kind of introduced a nice little buying zone right down here. So let me just open up a... There we go. A little bit of a buying zone, I would say, from around 91 cents down here to 89, 83. So almost like 91 to 90-cent range here is a good buying zone. This is more of a trading range trade right now where you might be scaling out closer to 93 cents all the way up to 94 cents, 94 and a half. Mm-hmm. Close to having a golden cross here. That may be interesting. I would hope that I can come closer to this trend line here, and then I'd be more willing to buy it. I feel like it's a little too overbought for me on the short term, like the 15-minute chart here. More on the date, like the 4-hour chart and stuff. It's definitely, yeah, still not where I want to see it to be able to buy. But as long as we can kind of stay above this trend line here, I'd be fine. I'm afraid we might tip back down here, unfortunately, for Matic, and we might be coming back down here to 89 cents or so. 90 cents, excuse me. High 89s. Matching up with this resistance level over here, that resistance, that's what's going on. Okay. Zoom out that resistance. Not much resistance over here. That's good. That's a long time ago. This is the 4-hour, and we broke out above it too, and we just came back down. We just had a short-term breakdown, like teeny. Oh no, we haven't had it yet. Okay. If you want to do a day trade, it might be okay to play that bounce, but I'd really be waiting for it to come back down here a little bit more. I hope the market can push this bad boy up. Maddox's good at having these little big pops every now and again, but you see none of these pops happen off of a real strong support level. Yeah, I would anywhere under 91 cents. Honestly, I'd be fine with buying it for a long day trade. But right now, it's definitely having a little bit more of a pullback into that buying zone, which would be really good for us to if you guys want to buy into it. And hey, Ghost Daughter is in Tacoma. It's coming down in chunks. Yeah, it's so beautiful out here. I don't have the picture on my. I do have the picture on my phone, but I don't have it like for you guys to see. Back when I lived in downtown, I had some beautiful photos outside my window, looking at the waterfront with the snow everywhere. Beautiful, absolutely beautiful. Can I look at Ethereum Classic? I sure can. Let me go over here very fast. So it broke down, and now it's kind of continuing this. When Loki needs something, he does this like really weird train whistle noise, like, but like very very high pitch, like not what I just did, but like high pitch that actually hurts your ears. That's how high he can get. And now that I did the high pitched noise, he's over here saying, "Am I okay?" Because he thinks I'm worried, and he wants to play with his new toy. Um, okay, so we're close to a little bit of breakout here. Oh, this one's gonna be a little bit more of a tough one. So on the short term here, I probably wouldn't take that breakout just because I would want to see it bounce back above this $19 and like 73 cent level. Most of this upward trend line. Okay, dude, I'm gonna throw this away. He has a bad habit of like chewing this stuff next to me. Then all of a sudden, a piece of my fat on my body just gets somehow with the tube thing, and then I just scream in pain. Uh, oh, I suck at throwing toys inside the house. Okay. Um, Okay, so if it breaks out, I probably wouldn't take that position right now. I would probably wait to see if it just continues to go more sideways here, kind of like, this downtrend or this uptrend was over. Now we might be going sideways, and we might go as low as $18.39, would be pretty bad, right? Now let me do this very fast. What's oh, there we go. Get it back off. Um, hmm, how far away is that though? 5%, and we just had the breakdown right. We haven't, so we had the breakdown yesterday. I'd be hesitant about buying this right now. I would, in order for me to get really jubilant about this, I would have to see it come back down to 18.53, or maybe let's just say anywhere between 18.50 and $19. And then from there, I would start scaling out once it started hitting $20, and then once it hit $20.58, scale out a little bit more. And then if it does go break out from there, and we decide to break back out above those October lows, especially from Ethereum Classic, then you might see us run into that 50-day moving average here. This one's a little bit more confusing to me. I'm looking at the weekly chart right here. You can see that we have to deal with that support. Support now turn into resistance. Um, we have to worry about the 200 weekly moving average too on top of that. I would feel like it'd be safer, if to buy the breakout above this and kind of see the launch that happens afterwards instead of buying now and hoping that it can make that larger move. Otherwise, if you want to buy now, you can make it a little bit more higher risk with a little bit more reward, honestly. Um, and so I would actually have a scale out level or a stop loss right around here, around the 1841 level right there. And then if we break down below that, I just can't call it quits on the trade unless you want to move it down a little bit more, which you definitely can do. I think more reasonable, but also more scary, is just have a stop loss around $17.73. That way, if we have some type of double bottom here, you're not freaking out about it. We're not like just wicked out of the market, so to speak. But that's an extra. Like if you bought it now, stop loss there is 6. Stop loss down here is 8, 9, 9. So at this point, it looks icky. I don't want to touch it really. The one reason I trade Ethereum Classic is normally it has these really big, powerful moves like what we saw here in June and July. It's been coming down a lot. I'd be dollar cost averaging for like a move like that to happen maybe sometime this month. But again, it wouldn't be off of a base technical play. It'd just be off of everybody saying, "Oh my God, let me go into Ethereum Classic right now." And Matic is on the way. I'm gonna go back to check out Matic for you. I hope Matic can break out, especially it looks like you're losing some of the exponential moving averages as well. I mean, as long as we can hold that 200 daily moving average, I think Matic will be fine. Excuse me. The more we go sideways, though, the more of a chance we see those death crosses occur. And then those last few golden crosses that we had over here that led to some really nice profits. Then we start looking at the last time we had death crosses, and then we're like, but yeah, I think there's a good chance that Matic has a big move up. I'm just more on the bearish side until we can really break out above some of these the indexes like the Nasdaq and the S&P can break out above those larger multi-month downward trend lines that we're going to be testing out this week. And no worries, can. And okay, buddy, I'm gonna end the stream right here. It was a good like what? Oh, this is a good 3 hours. Wait, so no, 1 o'clock. So 1 o'clock, 2 hours talking with you guys. Um, I'm gonna be doing more of these, just so you guys know. And so and next time we'll be doing more alerts and stuff like that. But I know when we get to these questions and stuff like that, it gets more in depth and like what you guys really are focusing on, and not everybody trades options, and I totally understand that options are a freaking wild thing to be looking at. But yeah, I enjoyed talking with you guys. I'm gonna go put my groceries up that I got like an hour ago and I never put up, and there's like a lot of frozen stuff in there next to a heater. So I gotta go put that stuff away. Then I'm gonna go take my day off and go run outside with Loki, or I'll be walking, he'll be running. So say goodbye to Loki, everybody. And no worries, guys. Happy to help you guys out as always. Is this the right foot view? All right, there you go. My head always makes my head look so dark because my light is made so I stand up. There we go. Loki, you a good boy? Oh, you should good boy. Oh, I don't think he wants to say it. Loki, come here. Oh no, he wanted to bring his toy up here. You gonna show off your toy? Can I see your toy? Can I see your toy? Can I see it? He wants me to throw it now. Yeah. He realized